IVM.
Folks, welcome and thank you for joining us on this episode of the Ideas Project Unlimited series by Smallcase. I am your host Anupam Gupta, and today we are joined by Atanuu Agarrwal, co-founder of Upside AI, a company that develops AI that helps you in investing that is unbiased, unemotional, and unaffected by market euphoria and panic. So I thought it would be a great idea to have him, talk about a topic that many of us, in fact, are getting really emotional about, and that's inflation. This should come as no surprise right now, but we are seeing massive levels of inflation today across the world. It reminds me of climate change, but okay, and especially in India. Petrol prices are through the roof, and don't even get me started on driving a car, the kind of money we are paying for petrol and diesel. So why are we seeing so much inflation, and how can money still be made during these times? Stay tuned till after the break to find out.
We face 100 dilemmas every day while raising our children and nurturing our families. Why not let science help us make informed decisions to solve our dilemmas? Hi, I'm Devi Shobha.
And I'm Meghna. We host Big Talk About Tiny Humans, where we will help you unpack challenges around parenting and your child's development.
And more importantly, we will equip you with research-backed strategies that you can readily act on.
Tune in to our podcast every Wednesday on the IBM Podcasts app, website, or your favorite podcast platforms.
Hi Atanuu, thanks for being on the show. And let's start with some basics. What is inflation, and why is it important for a retail investor to understand what inflation is?
Right. Thanks, Anupam, for having me. So inflation, I think the easiest way to understand it is if a price of milk changes year on year. If you're paying 50 rupees for a liter of milk or whatever it is this year, and you pay 60 rupees the next year, so you've paid 10 rupees more for the same quantity of milk. That's basically what inflation is. Of course, this is an oversimplification. Countries capture inflation in different ways. They create baskets of goods, which include many things like milk and other discretionary items as well. And they publish this data regularly, usually monthly. And that's what gets reported as inflation numbers.
What is the relationship between interest rates and other macros, like unemployment, inflation, everything else? I'm just trying to understand how is, in the overall picture, how is the average person's buying power affected?
Right. As all of us have probably learned in 101 economics, right? It's all demand supply. So what happens is when unemployment is very low, that means a lot of people have jobs, demand for goods is high, right? So when demand for goods is high and the supply it'll increase over time as companies say, okay, demand is high, so I should increase capacity, but it won't happen immediately. So then supply is not increasing at the same pace. So when demand is high, supply is not increasing, so prices have to increase, right? So generally the relationship between rates of unemployment and inflation is inversely related. Right, lower the unemployment rate, higher is the inflation. Interest rates and inflation have an interesting relationship because, again, typically when central banks raise interest rates, it reduces money supply and reduces inflation. But again, because it's a causal relationship, and again, it's not pure interest rates and inflation, there can be times where high inflation and high interest rates, right? And there can be time with low inflation and low interest rates, which we have seen for the last decade or so before the pandemic. So it's a little more complicated, but I guess one way to understand it is as central banks raise interest rates, it tends to lower inflation because it lowers money supply.
A lot of moving parts out there, folks.
Yes.
Terminology. Atanuu, I want to talk about a lot of the inflations that are out there. We spoke about inflation.
Right.
Let's talk about deflation, the opposite, because Japan has seen that.
Yeah.
And it's a great example of deflation. What is deflation?
So deflation is actually, it's obvious, it's reducing prices year on year. Intuitively, you think, oh, that's a good thing, right? And I'm paying lower for things. But you have to think about it from the economic perspective, right? Generally, countries want benign inflation. If you ask a central banker, his dream will be that my country has some inflation every year, but controlled inflation. So even RBI's, for example, inflation target is, I think it's 4% plus minus 2, yeah. Right? That's the tolerance band. So between 2 and 6%. So it's not zero, right? Similarly for the US, which is a very developed market, the target is around 2%, right? Plus minus. So again, central banks want inflation, and that is because that's a sign of a growing economy. The way, it's an oversimplification, but the way I like to think about it is that you want upward mobility in your country. You want people who are poorer to become richer slowly, so that people feel like they're moving up in life. When countries don't have upward mobility, that's what causes revolutions and leaders getting thrown out, right? So inflation is a good thing, but control inflation. Deflation is the opposite of it. Japan saw it. As you said, Japan, because it had an older population, demand wasn't as high. So the one biggest reason for deflation is that consumption or demand is low, right? It's not growing year on year. And because Japan's population was aging, its companies were not really innovating, so the efficiency wasn't going up. That's why it saw a period of deflation, which it tries very hard to change, right? It's even now it's making efforts to make sure that they have some inflation.
This next one is a tricky one, stagflation.
Yeah, stagflation is actually the worst of both worlds, where you have inflation in your country, but you don't have growth, right? So right now, when I was talking to you before about upward mobility, or I said central banks like inflation, I made an implicit assumption that inflation means growth, right? Usually it does, but there can be situations, and potentially today we are in a situation like that, where there can be stagflation, which is where you have inflation, but you don't have growth. So now, how does that happen? One example is supply chain disruption. So as I told you, everything is demand supply. So even inflation is determined by demand supply. We discuss an example where demand goes up and supply doesn't go up and hence causes inflation. But there's an inverse situation where the supply goes down, right? And the demand stays the same or increases moderately and inflation goes up. So stagflation happens when situations like those happen. And it's very harmful for the economy, very harmful for the country, because again, as I said, you have the worst of both worlds. People are not making more money, but they're paying more, so it's a pretty...
What's happening in US, Europe? I mean, I see headlines like, decade high or 40 years high. They've never seen this kind of stuff. But what's happening out there?
So I think it's a direct consequence of money printing, right? US and Europe, since the global financial crisis in 2008, have seen unprecedented levels of money printing. And that was in part possible because of benign inflation, right? So they said that can we print more and more money to spur economic activity? Because again, I said you want growth, right? And these countries are developed countries, so it's harder to extract growth. And that was put on, on steroids during the pandemic, right? When the pandemic happened, it was like an asteroid had hit Earth, and they had to do something to make sure that demand doesn't absolutely crater, capital markets don't crater. So I don't blame them. They had to print money. And they printed like nobody's, dreams, especially the Federal Reserve. And when you print a lot of money, it's very obvious you make the system flush with liquidity. And there's so much money going around. Again, the supply of money is very high. Demand is not that high. So the value of money goes down, which means inflation goes up, right? So that's what's happening. That's the reason. And of course, the other big elephant in the room has been the Ukraine war. Which has worsened supply chain issues. So the pandemic caused a lot of supply chain issues around the world. Shipping lines were disrupted, and that was put further worsened by the war because countries put sanctions on Russia, which increased oil prices. Lots of materials and goods that come out of those two countries could not be produced anymore. So all of these factors put together, I think, have led us to this place.
Let's talk about our neighbors, hyperinflation, and what's happening in Sri Lanka. How do they land up there?
So, I think India is very well placed compared to its neighbors. And the reason for it is essentially India has very robust domestic consumption, right? So we actually have a lot of people and a lot of people who consume a lot of things. So that means that our companies can produce things and give it to these people and make money, right? They're not so dependent on other external factors. In fact, we import a lot. When you look at countries like Sri Lanka was heavily dependent on tourism, right? When the pandemic hit, it had a massive impact on tourism. They are massively dependent on exports. Disruptions around the world, supply chain disruptions can cause fissures in that supply chain for them where they can't export as much. And of course, the biggest factor is the government spent too much, right? Sri Lanka went through this period. Again, these are my personal views, where the media was sort of co-opted by the political forces, where they were not really showcasing the true nature of the country, the economy, and people were in this false sense of lull, and they basically kept spending more and more money. They kept trying to do this, these ill thought of schemes like organic farming and all that. There are a lot of factors at play, and basically the government spent money it didn't have and then was not unable to repay it, which caused all of the...
So you think India is better off than at least neighboring countries like Sri Lanka, or in the world right now, where does India stand? Worse off, better off, depending on who you compare it with?
Right. So, I mean, India, at the headline level, you could say that India is definitely an emerging economy, very low GDP per capita. We have a high fiscal deficit. We have a current account deficit, which means that we import more than we export. So these are all red flags. But as I said, we have very robust domestic consumption. We have very large number of people consume lots of things. Companies produce them. Foreigners want to invest in those companies. So even though we have a current account deficit, we don't, as I said, we import more goods than we export, but we export a lot of services, right? We get a lot of capital inflow because, as I said, an attractive economy for people to invest in. So for those reasons, I think India is on much more solid ground. And I think we've learned from our experience in the 90s when we were at the brink of defaulting. The RBI has since then very consciously built up reserves. We have lots of forex reserves which help the RBI stabilize the currency in tough times. And that is why the Indian rupee hasn't depreciated as much as even the euro, right? Which is depreciated a lot. Or even if you look at the Thai baht or the Japanese yen, these are currencies that have depreciated way more than Indian currency has. So I think, yes, India is much better placed, and hopefully we'll keep our eye on the ball.
So let's talk about India specifically. What's causing inflation right now? Because there are a lot of factors, whether it's oil prices, taxes on fuel, raw material costs. I don't know. Like you said, the whole Russia and Ukraine war, and of course probably the lingering effects of the pandemic. So what's causing the inflation in India?
Right. So one thing India didn't do, which other countries, more developed countries did, it didn't print a lot of money. We didn't all receive checks in the mail like a lot of people in the US did, right? So that's a good, in hindsight, a good thing that India did, where it didn't create that oversupply of money. So, but on the con side, unfortunately, we are very oil dependent. We, I think, import 80% plus of our oil demand, which means that we are very, very closely sort of linked to the oil prices, right? So India's oil basket, whatever we do import, the prices compared to last year are way, way higher, which means that itself is just pushing up our import bill. And of course, even though we manufacture in the middle a lot, like we manufacture intermediate goods a lot of the inputs come from outside, right? For example, palm oil, right? Palm oil, we import a lot of it from Indonesia, and there was a time when edible oils were at very high prices. So I think India's problem right now is more supply chain related. And I think it's a more relatively easier problem to solve. Even if you look at our inflation levels at 7%, the CPI is not very high. The US is seeing 8-9%. WPI is high, but I think that if I look at it holistically, I feel I'm more bullish on India, especially now in the last few weeks. Oil prices and commodity prices have come down. So I think these are all big positives for India. And as I keep harping on, because we have domestic demand, these can really benefit us. So India could be in a very good position, actually.
So India has also been seeing an economic recovery. How has the recovery been since the pandemic? Because now we're also fighting inflation, which wasn't there maybe last year, which wasn't there maybe the year before that. So how is our economic recovery doing?
Right. So if you read a lot of financial news, this term will be familiar. It's called a Case-shaped recovery, right? It's been uneven, where a lot of large firms have done really well. So if, for example, if you follow the financial markets, you must have seen HUL just came out with its results, I think yesterday or something. And they were really good results, right? The volume growth was obviously low, but value terms, they were growing 20% or something in revenue terms. So that happens in such periods, such periods of high inflation. What happens is large companies do very well because they are able to manage their input costs. They are able to manage supply chain disruptions better. For example, Tata Motors is an example of managing the chip shortage very well. And that is why they gained market share on, let's say, someone else who didn't do it well, like Maruti. Right. So there are opportunities in this period. And that is why typically large firms increase their market share. And the firms that suffer are the SMEs and the MSMEs. So if you look at the underlying data, you'll see that. It'll reflect that reality. And, unfortunately for India, SMEs and MSMEs have seen 2 or 3 back-to-back events which have caused disruptions. Right? There was a demonetization, and then there was GST, and now there's the pandemic, and now there's war and inflation. So that sector is definitely taking a beating, and the government is doing its part, at least now, to try and support it. They have these schemes which guarantee credit and everything, but still, I think the short answer is a Case-shaped recovery. Large firms are doing really well, or are starting to do really well, and the smaller firms not so much.
Yeah, you spoke about the government. Let's talk about that. What is the government doing on the inflation side?
Yeah, so I think there are 2 parts, right? There's government and RBI, which is supposed to be independent from the government. The RBI is doing its part. It's raising interest rate. They did an emergency 40 bips hike, and then they followed it up with another 50 bips hike. So they are doing their part in restricting the money supply and being proactive about it. And in fact, in some phase, their hand is forced because the US is doing it. So if they don't do it, then it'll cause further disruption. So they are doing their part. The government is, the way they're trying to manage it so far has been a lot of duties, export duties or export bans on commodities like wheat and other, like for example, they had a duty on oil export, which they just removed right now because of price. The price was falling. But again, those are short-term measures. I don't think the government should resort to them in the long term because they can cause disruption in prices in the global markets, and you don't want that because it'll hurt our country in the long term. So these are some of the short-term measures they're taking, right? Basically restricting the amount of goods going out of the country so that the supply within the country is high.
Yeah, and some amount of fuel taxes also, which I think is at the state level.
Correct. So that's more complicated because they have to balance their fiscal budget, right? So, I have some sympathy there. They have to pay for it somehow.
State level finances are tricky. Okay, Atanuu, let's move to the investment specific part of this episode, right? So what are some of the trends that we typically see during inflation?
Right. So inflation, if you look at historically, gold is generally considered a hedge against inflation. Gold is complicated because if I was to look at its dollar returns, it's underwhelming. If you look at the last 100 years, for example. But if you look at its INR returns, it's far more compelling because I think gold is what intuitively is not intuitive actually. It's kind of like a dollar bet for the Indian investor. Because gold's price is denominated in dollars, for an Indian investor in times of high inflation where there's a lot of the dollar is experiencing significant strength and a lot of money is flowing towards there, gold gives you some of that upside, right? Because gold is denominated in dollars. So for Indian investors, I think gold is a good bet. Some part of your portfolio should be invested in gold, 5-10% maybe. In terms of sectors, I would say that generally energy and commodity sectors, which are very closely linked to the price of goods, right, where immediate inflation can be passed on to the consumer, these sectors do generally better than others, where again the whole point is, can you pass through that inflation on quickly? So these are generally in favor and have typically done well, but again, it's hard to predict when the tide will turn, right? Now in the last few weeks prices have fallen a lot, right? So yeah,
let's drill down into that for a bit. Sectors that have pricing power during inflation, sectors that do not have pricing power, sectors that are probably inflation proof. Let's talk about all three of them.
Yeah. So sectors, as I said, general rule of thumb is large companies which with scale have a lot of pricing power because they can control a lot of their input costs, and also because they can control the input costs, they can drive out competition, and that gives them more pricing power, right? So general rule of thumb is, look at in any sector, look at the top 3-4 companies, they will increase market share, do well. Sector wise, consumer staples, pharma, IT, these sectors do well. They're considered defensive sectors because first of all, their demand is very stable. They are considered essential. So the demand doesn't go down as much. It's inelastic, as they say, with increasing inflation. And some of them are also very export led. So whenever inflation is very high in a country, and generally FX rates are determined by inflation difference. So if your inflation is very high against, let's say, the US inflation, then your currency will depreciate. And when your currency will depreciate, that time industries like pharma and IT, which export goods or services, do well, right? So consumer staples, pharma, IT do well. Real estate is interesting. Real estate, I think, if it's a rental yield play, you could argue that you could pass on the higher inflation to your tenants, but because interest rates also tend to go up when in periods of high inflation, that can put downward pressure on demand, right? So real estate has sort of a little bit of both at play. Sectors that don't do well, consumer discretionary sectors, especially auto and all that, where people can push out those spends to later, those kinds of sectors typically don't do well, or any sector where goods can be easily be replaced. Basically that's the understanding, where you can essentially take a cheaper option. Those sectors don't do well. So.
Any inflation-proof sector, maybe banks. I can't think of banks being affected at all by inflation, but I guess they are. Interest rates hit them also.
Yeah, with banks, what happens is that when interest rates rise, all banks have to hold a bond portfolio, which is mandated by the government. So the prices of those bonds fall because the prices of bonds and interest rates are inversely related. So there's a little mark-to-market loss. But on the business side, what ends up happening is that they can possibly earn higher margins. So banks, the whole thing is what you call net interest margin, which is the rate at which they give out the loan and the rate they have to pay to borrow. The margin can expand in periods of, when interest rates are going up or periods of high inflation. So financials can do well, but again, there are lots of factors, especially, if it's very high stress. Right now, India is not in that scenario, but if there's lots of stress in the economy, then there can be more defaults and stuff like that. So that's the mitigating factor. But financials is generally considered a, decent neutral bet in times of inflation.
Okay, let's go to the last section of this episode from an investor's perspective. Should investors change their investing habits during inflation?
Right. So, I'm speaking to retail investors, right? So I'm a huge fan as far as non-professional investors are concerned of what they call strategic asset allocation, right? Which is you determine what your short-term, medium-term and long-term goals are in life. And based on those goals, you sit with a financial expert or a trusted family member who understands finance and determine what the right asset mix for you is. What amount of equity you should have, debt you should have, gold you should have, any other asset, real estate you should have. And you basically stick to it, right? It shouldn't matter to you what happens on the inflation side, what happens in the equity markets. You should have a, SIP going, whatever. So I'm a big fan of strategic asset allocation. When you come to tactical asset allocation, especially if people who feel like they understand enough of the finance world and they want to play inflation, maybe, you could try and enter sectors like, as I told you, pharma, IT, commodity, energy sectors, which do well in inflation and go out of others. But personally, I think it's a very difficult play to make because the changes are so fast and furious and there are so many factors at play. Putting it all together and parsing the data in your mind and saying, okay, now this is going to happen. It's like playing Russian roulette. Right, and right now quite literally Russian roulette. So I mean, I'm not a big fan of that. I think people should stay away from that. Just follow your long-term asset allocation and just keep doing that.
Okay. And last question, Atanuu, what are some asset classes specifically that can actually protect you against inflation or help you hedge your investments against inflation?
Right. So I think generally when in periods of long-term inflation, people always say you should have equity because equity companies want to make profit, so they pass on that inflation. So equities is always a core part of anyone's portfolio and it should always remain that. Apart from equity, as I told you, gold is considered a natural hedge against inflation. That may be debated globally a little bit now, but I think for Indians, it still makes a lot of sense. And I don't mean buy jewelry. I mean actually buy gold for investments. I think sovereign gold bonds are great for that. So gold is really good. You should have some part of your asset allocation there. I think you can, in terms of debt, you can look at RBI, for example, has a floating interest rate bond, which retail investors can invest in. Again, the idea there is that as the RBI increases interest rates to combat inflation, the interest rate on these bonds also go up, so you earn more money. So you should, consider floating rate bonds as part of your portfolio. And besides that, I think, of course, you should have some uncorrelated assets like real estate and, crypto used to be an option. I don't know if it's an option anymore, but yeah, I mean, that's what I would say.
Okay. And folks, if you enjoyed this conversation on inflation, do check out Upside AI's Shockproof Smallcase, a portfolio that uses macro signals, growth, liquidity, inflation, volatility, etc., to determine asset allocation across equity, debt, and gold, and deliver stable long-term returns with extremely low risk that you can track and invest in with your favorite brokerage account. Link in the episode description and the show notes. Folks, that is it. That's a wrap on this episode of the Ideas Project. My guest, Atanuu Agarrwal, co-founder at Upside AI. Atanuu, thank you so much for doing this for our listeners.
Thank you. It's my pleasure and great to be here.
Good to have you here. And folks, hope you enjoyed this chat with Atanuu Agarrwal and hope this helps you understand inflation a little bit better and where you can invest your money to minimize the effects of inflation on your portfolio. If you like this episode, do consider subscribing to the podcast and leaving us a review on Apple Podcasts or Google Podcasts. This podcast is powered by Smallcase. We will come back with more insightful conversations to help you achieve a well-rounded investment portfolio. Until then, bye-bye. See you next Wednesday for a brand new episode of the Ideas Project.
Hello. It's been another great week on the IBM Podcast Network. On the Wired Talks, Siddharth talks to former Secretary General PDT Achari, who sheds light on words being banned from usage in Parliament. On Cock and Bull, Cyrus, Ayushi, Akash and Antariksh discuss the controversy surrounding Smriti Irani's family restaurant in Goa. On The Habit Coach, Ashton speaks about how a nursery rhyme can be surprisingly inspirational for adults. On Think Fast, Varun and Suchita throw light on the rise in investments in plant-based meat. And on the Life Manifesto, Zarina helps you identify energy vampires and gives you tips on how to deal with them. Once again, everybody, remember we have amazing merchandise available. You can go to ivmpodcast.com/store or go to our website and you'll be able to see the link. Do check this out. Do buy some stuff. It really does help us out. Do remember, follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. Also, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. Remember, if you do tell a friend about a show and they listen to the show, you'll have somebody to talk to the show about. We'd really appreciate it also if you could give us a rating on whatever platform you're listening to us on. And finally, do remember we're also available on YouTube. A number of our shows are available as full video shows, but every show is available on YouTube. And finally, we'd like to thank our sponsors this week, both Lifestyle, Smallcase, Capgemini, and Intel vPro. Thank you so much for making this possible.
Hello there, this is Danish Said and I'm hosting a new podcast called Do What Floats Your Boat by Boat Lifestyle, where I explore the alternative lives of a new India. Every Thursday, I'm talking to people who follow their dreams even if they're unconventional and they've managed to build a community for like-minded people. We speak with trendsetters like Ruhi Dosani, Shantanu Maheshwari, Mithpat and even Aman Gupta. Tune in to new episodes on the IVM Podcast app and website, the Boat YouTube channel, or actually wherever you get your podcasts from.